Welcome to another Market Matters weekly video. I'm Nicholas Forsyth, Director at Market Matters, and I've got James Garish, our Chief Market Strategist. Now James, we want to focus on contrarian plays this week, but firstly I thought we'd kick things off just with the market at the moment. What are you seeing on the desk at the moment? What have you been doing the last couple of days?
Yes, surprisingly strong. The market's up 70 points as I just came down. So, a lot of back end of last week, commodities started to cool off as we've been talking about. They're up today as I just came off the desk, still buying in banks, and we're starting to see some of those unloved sectors starting to find some form. So, Westfield that we bought recently, QBE. Transurban, a bit of buying going in there. So some of these unloved areas, and that's why we're talking about contrarian plays today, because some of those are finding some support in the market at the moment.
Fantastic. And the topic of today's video is contrarian plays. Now James, would you call yourself a contrarian investor, or in terms of contrarian plays, could you define what you're talking about there and what you mean by this and why you wanted to make this the topic today?
Oh, when things hit the media, when everyone's talking about a particular sector or a particular stock or have a consensus view, so everyone thinking the same way, that's when that area is near a top, or there's more risks around that area. So, from a market's point of view, you've got to think 6 to 12 months down the track. So, Westfield's a key. I'll give you two examples here. Westfield was a key example. We saw we called the top from $11 and we're targeting $8.50. All around rising interest rates. That wasn't a consensus view. Everyone was keen on Westfield, and that's why it dropped so far. We've fallen into that trap once or twice. Vocus on our perspective. We had a view on Vocus, but it was a similar view that the market did. So when everyone thinks that same way, you leave yourself open for disappointment, and we've seen what has happened with Vocus. So we've got to think a little bit differently than the broader market does, and that's what we try to do.
Okay, and on the buying a stock at a certain price, we get a lot of questions from subscribers when we've identified a stock at a certain price target, and you could probably argue it's a contrarian play, but it actually gets to that level and we don't actually execute. For you personally, what has to stack up for you to actually enter into a position and I guess pin your ears back and start buying? You talked about Westfield, you identified a level at $8.50, dropped below that, you end up buying it when it sort of kicked back. What has to align in your thought process before you pull the trigger?
Markets are fluid, so things change. So I'll give you a couple of examples here. So gold, for instance, we're targeting lower levels in gold, but we're yet to pull the trigger on gold. So we still see high US dollar strength. So we're sort of targeting 103 on the US dollar index. It's near enough there. So that needs to play out before we're going to go into gold. I think there's been some other examples. SGR, casino stock. We were looking at that under $5, but we didn't pull the trigger because we wanted to maintain reasonable levels of cash. So from a portfolio perspective, that's a great business. It got smashed, and it looked reasonable value where it was, but we wanted to maintain a high level of cash. So everything needs to align for us to, or the majority needs to align, I should say, for us to go into a position. Okay,
and probably also depends on our cash latings and how much risk we want to take at that point in time.
This is the whole thing. It infuriates me around recommendation services that don't take into consideration that concept. We're managing real money. We've got the constraints as each investor out there does. So that's always going to play into it when we're trading with real money and managing a real portfolio.
Definitely. And for the viewers out there, speak to a lot of people that are quite cashed up. Also speak to a lot of people that capital is not readily available. They might only be able to buy one stock. Don't mean to really put you on the spot here, but what would you say your best sort of contrarian play out of our current portfolio for the longer term is, and then one for the sort of medium shorter term? And by that, what's longer term is probably 12 months, and medium term is probably 3 to 6. That's what we define.
Well, this is the thing. So I brought up Vocus before, and it's been one of our poor picks, there's no doubt about that. Everyone loved it. It hasn't played out as anticipated, and it's been sold down, but no one wants a bar of it. So that's a bit of a contrarian play. We bought TPG the other day, which is another contrarian play, short-term trade. HealthScope is a contrarian trade at the moment. On Monday's report, we touched on aged care stock, Estia. So 12 months ago, everyone was talking about aged care being the next great sector to be involved in. Now no one's talking about them. The thematics of that sector still stack up. There's just been some stocks with specific issues. So you know, start to look at that sector. I'm not saying go out there and buy it now, but we're looking at that sector. Gold's been hit hard, so we're looking at our entry in gold. Broader commodity space, you know, that's the consensus trade at the moment. Be long commodities. We'd say that there's a few signs that commodities should be topping out. So you know, you just got to think a little bit differently than the broader market does, and that's what we try to do, Nick.
Yeah, awesome. And just one last question. Based on what you've told me there, you sort of emphasising that most of the opportunities now, given where the market is coming in stocks that have almost been beaten up. Ones that have, you know, almost unloved or have had an earnings downgrade, because I guess all the other stuff is generally priced for perfection.
Well, yeah, I mean, you buy a growth stock that's on a high multiple that hasn't downgraded earnings, and there's the risk around there that they potentially will. So, yeah, we're looking at some of those unloved areas of the market. So, you know, our last three buys, I think, have been Westfield, QBE, Transurban. You know, the market loved them 30% higher. Then now we're talking about the impact of higher interest rates now, and analysts have turned bearish. So, I guess that's the key message I want to get across today: is don't think about what's on the front page of the newspaper. Think about you know, broader concepts that so you position your portfolio for 6 to 12 months down the track.
Fantastic. Thanks a lot for those actionable insights, James. Thanks everyone for watching. Any other further questions, feel free to reach out to us by replying to this email, or conversely, you can always call us on the 1300 number, which is 1300 301 868. That was 1300 301 868. Thanks again, James, and thanks again, everybody.